morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some financial results from the AMCL Group, the parent company AMCL, as well as subsidiary Answer Merchant Bank Limited. Both groups would have reported improved earnings over the prior fiscal year. However, there is some quite surprising news to some investors in terms of dividend announcements for the AMCL Group. Let's take a look at what investors would have, or what both groups are reported in terms of financial results and what investors might expect in the coming months ahead. So turning firstly to AMCL Limited, or the AMCL Group. Well, the group would have reported an earnings per share figure of $3.32 for that fiscal period ended 2024, which was a 10.7% increase from the $3 reported in that fiscal period of 2023. Driving that performance was a 5% improvement in revenue from $7.046 billion to $7.4 billion. Operating profits overall up 7.9% from $876 million to just about $945 million. Ultimately, profit attributable to equity holders improving 10.6% from $516 million to just about $571 million. So certainly good reading in terms of an earnings perspective, or from an earnings perspective for shareholders in AMCL. Now, when we take a look at the group's performance across the profit segments, we can see that there was generally improved performance across most of its operating segments. Construction, manufacturing, packaging, and brewing, for example, in that green segment, increased from $476 million to $612 million in terms of profit before tax contribution, 28% increase. Automotive trading and distribution in that blue segment increased from $164 million to $200 million, just about a 21% increase. And the banking and insurance segment in that let's call it a purplish segment, increased from $203 million to just about $213 million, a roughly 5% increase. Media services and parent company, the loss widened from just about $1 million loss in fiscal 2023 to $118 million loss in fiscal 2024. Overall, however, that profit before tax would have improved quite significantly over the fiscal periods. From a profitability margin perspective, we can see that there was also improvement. Operating profit margins improved from 12.4% to 12.8% across the fiscal periods, while PBT margins, or profit before tax margins, also improved from 11.9% to 12.2%. What does that mean for shareholders? Well, that means the group is continuously improving its conversion of every dollar of revenue generated into revenues of profits, at least at a before tax level, over the past few fiscal years, certainly from 2022, where that PBT margin was just around 7%. Now, one of the major announcements that would have caught some investors by surprise, in fact, would have been the announcement of the suspension of dividends of the AMCL Group for the next 3 odd years, from fiscal 2025 to fiscal 2027, in the pursuit of the group's objective of doubling its profits by 2027, which was really or has been roughly a 5-year initiative that should have started way back in 2022 or thereabouts. Now, that will have come as surprising news, as mentioned, to some investors, especially considering the very stable and reliable dividend history of the AMCL stock in particular. And as we can see, over the past few fiscal years, that dividend has been at a very constant $1.80 from fiscal 2021 to fiscal 2024, with a marginal decline in fiscal 2020 of $1.65. And of course, we all know that that was the height of the COVID period, where there was a lot of uncertainty. So those dividends may have been throttled back at that particular point in time. But moving forward, very reliable. A very reliable dividend that would have been paid by the AMCL Group. And of course, investors who would be holding the stock for the long term, looking at and counting on those dividends as some form of cash flow, would know their result would rather be tested over the next 3 or so odd years, particularly given the importance of dividends in terms of the overall total return for AMCL investors. And when we take a closer look at what that dividend has meant in terms of total return for AMCL shareholders, well, over the past 10 years or so, from fiscal 2014 to fiscal 2024, the total return on AMCL stock has been just about 15%. And when we take a look at the return attribution, there was roughly a 10% decline in AMCL stock from 2014, from $66.40 to just about $59.80, or roughly 10% decline. while cumulative dividends over that period would have amounted to just about $16.65, or roughly 25% return over that initial stock price of $66.40. With that announcement of the suspension of dividends, the stock price has fallen roughly 14% year to date to 51.50 as at the close of Friday. So we can see that it has certainly spooked some investors who may have been reliant on dividends for in terms of holding AMCL stocks. So certainly investors holding AMCL stock or continuing to hold AMCL stock and invest in AMCL for the longer term would be definitely taking a longer term view of the stock and placing a lot of confidence and reliance in the management team's ability to execute on their acquisition initiatives to generate that 2x growth, and with the eventual resumption of dividends post 2027. So at the price of $51.50, AMCL is trading at a price earnings ratio of 15.5 times above the conglomerate sector average of 12.4 times, with a trailing dividend yield of 3.5%. Of course, that falls to zero on a forward basis for the next 3 years, which would be, of course, below the sector average of 3.6%. So with that revenue growth in mind, the acquisition and geographical diversification that's built in and will continue to be built in into the Macau stock, the suspension of dividends, of course, perhaps surprising some investors who are income-oriented and those slightly elevated valuations. Bourse is maintaining a market-weight rating on AMCL for the timing with a watch outlook as well. Turning very quickly to Answer Merchant Bank, the subsidiary, where the group would have reported an earnings per share figure of $1.90 per share, a 25.8% increase from the $1.50 reported in that prior comparable period of fiscal 2023. Now, on a profit before tax basis, there was actually a decline from $200 million to just about $185 million, but ultimately with a low effective tax rate, that those profits attributable to equity holders actually improved from $129 million to just about $162 million. Now, on a earnings per share basis and price earnings trend basis, we can see that there has been some volatility in terms of earnings per share for AMBL, and with the most recent tariff tantrums of international markets and the continued softness in terms of local markets, it remains to be seen how those changes in portfolio valuations would impact AMBL on a forward basis as we move further and further into 2025, again with those market volatility impacting portfolio valuations and ultimate performance. So at a price of $41, AMBL is trading at a price earnings ratio of 21.6 times above the sector average of 12.9 times, with a dividend yield of just about 3%, below the sector average of around 3.9%. So with that improved operating income in mind, high operating expenses, elevated valuations, and of course keeping an eye on market volatility and the impact on AMBL's earnings over the fiscal 2025, Bourse is maintaining a market weight rating on AMBL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can also catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.